Welcome to Fulfillment Key, and today I'm gonna talk about Fundrise. And if you guys have not heard of Fundrise, they're basically a REIT kind of investment company that allows you to put money in and put it into different kinds of properties, whether they're commercial, residential, or rental properties. They manage the properties for you. They buy the properties. So a better way to kind of think of it is crowdfunded real estate. Crowdfunded REIT, which basically is, investing in tons of properties without you having to tie up all of your capital into one property. Now there's pluses and there's cons to this, but I kind of want to get into the good thing. So if we take a look over here, I'm already logged in, but the kind of earnings that we're going to look at from this, and as you guys already know, we're kind of in a quarantine right now. We're in a pandemic and a worldwide crisis. I hope you guys are doing well, but that's kind of reflected in the dividends, and as you can see, the appreciation, the properties and the values have gone down. If you already have a Fundrise profile, this video might not be that useful to you, but if you don't already have one and you kind of want to see what the platform looks like as of 2020, as of April 2020, or actually May now, then this is going to be the video for you. But as you can see, so far from the year to date, I've made about $8.43, which is not a lot. Granted that I've only put in about 2.1K, as you can see on screen. But we can go ahead and do some math here. So if we take 8.43 and we divide that by, the total amount invested, which is 2101.69, we're going to get basically not even a percent. So let me go ahead and talk about why this is, and kind of go into depth more. I think that the reason the returns are so low right now with Fundrise is because of everything that's gone on. As you can see, the $1,000 addition was done in March as I'd added it in. So granted, after March, the dividend started to pay out a little bit better. So even if we were to evaluate this 843 out of 1,000, we would still not even be at barely a percent. So right now, I would say maybe Fundrise is a decent move for long-term growth, but as it stands right now, as you can see by the appreciation, the dividends, and the fees that they take, we're left with $669, which sure they don't take that much, but they're counting the appreciation of the properties against you. So basically, the dividends you're making, they're already taking an advisory fee out of it, which is basically their management fee and them taking out a fee for allowing you to use their platform. But at the same time, they're also, charging you for appreciation. So when the properties go down in value, they're taking that out of your dividends as well, which I think personally is not, I know they have to do it, but still at the same time, it just doesn't seem like super fair. Because for example, if you own a property and your property goes down in value, if you're, if it's being rented right now and it's not vacant, then that person who's living there is still going to continue to pay you the same rent. So you're not going to have to deal with this quote unquote appreciation decline, right? If you own your property, it's not going to count against the dividends that you're making. And the dividends in that case would basically be, your rent. But let's go ahead and take a look at the projects and go a little bit more in depth. So the projects are basically what they actually invest in, crowdfunded, using your capital. So as you can see here, they have different kinds of properties that they have invested in. So here you can see there's a DC. Here's what they project that the returns will be. Here's an apartment that's currently being in development. And the cool thing that I think about Fundrise is actually pretty neat is that they show you what they're doing with the properties that you're invested in. For example, here's a video of a property that I've invested in Los Angeles as a crowdfunded investor. And you can see there's a little bit of a video. They have their little logo. And yeah, you get the idea. But they're all here. And they show you basically what kind of properties you've invested in. So if we take a click here, we see C2. These are basically the rankings. C being one of the lower ones. Where do we go here? Positions. So you can see here, growth, REIT, income. These are basically self-explanatory. Balanced being it's a balance between growth and earnings. Income, REIT, is basically focused on getting dividends. West Coast REIT is focused on the West Coast. And basically what these mean, stabilizing meaning it's almost finalized, they're working on it right now. Ramping up means they just took your money and put it into it and they're working on getting it there, so you'll eventually get paid out of it. Now this could also be a reason why I'm not receiving the full percentage, because it's in this ramping up category, meaning I'm not getting dividends from it right now. So these two right here I'm not getting dividends from, and this one as well. So these are the only ones that I'm getting dividends from, which would explain the low percentage. But regardless, I do think that if you're in Fundrise for the long term and you want to invest for the long term, then Fundrise would be a good idea. But as with any investment, I'm not a financial advisor, so you should also do your own research. But you should also look into this and look into some of the other options like CrowdStreet, for example. I think that's the name. But yeah, there's other options out there. Fundrise is just one of them. But if you do take a look at this, like I've shown, we can take a look at the dividends. I have earned $5 for my Q1 dividend, which is not a lot by any means, it's just a coffee, but it's nice to know that your money is at least earning something sitting here, especially knowing that now that the Fed has cut interest rates, most high savings bank accounts are not paying a lot of money. In fact, most of them only pay like 0.1 or 0.2% at this point, or even 0.3 if you get lucky. But yeah, this is the total video on Fundrise. Like I said, if I haven't already touched upon the pros and the cons, the pros are, it's a decent return. It's not like crazy, especially right now. You're not going to get more than maybe 1% or 2% a year for the next year or so, and then after that it'll probably go up. And it's also, really visual. You can see what you're investing in. It's a lot easier for the user to understand. But there are cons, and one of the main cons that I want to tap into is the liquidity. It is not liquid, meaning like it is very difficult to take your money out. I mean, you can if you have a little amount in. If you have a lot, I'm not sure what the implications are, but I have read into their kind of, I don't know if you would call it terms of service, but they have like basically smaller notes here. And when you first sign up, they have this long paper that you can look into, and it says that liquidity is not guaranteed, and I'm not even sure if this investment is guaranteed by the SEC or anything like that. Not the SEC, but I know there's another SIPC, there we go. It's not SIPC insured. So when you put your money into stocks, if the brokerage goes out of business, you still get your money back if those stocks are still worth something. I'm not sure if this is SIPC insured, so that's what I was trying to get at. But yeah, that's the con. And the second con is right now the returns are not that high. But if you can get past those two things, I think it's a pretty decent investment. Like with any investment, don't put all your eggs in one basket. Try to spread them out. But I hope this video has been kind of use to you. Hopefully you've been able to see inside the platform. I can take a look at a couple of the other things here. Performance. These are just kind of the same things, just put with little nicer graphs on different tabs. But yeah, I hope this video has been useful to you. If you guys have any questions, feel free to comment. And if you guys really like the content and you guys like what we're doing here, subscribe and like the video. But yeah, that's all for today. Enjoy your quarantine. Be safe and take care.